there, welcome to another class. We are going to look at a topic known as Commercial Arithmetic 2, and our subtopic of today will be income tax. And this is a very exciting part because we all know that government gets some tax, and one of it is known as income tax. So we're going to understand a few things on how we go about the same. So we shall start by giving some definition of terms that you're going to be using along the way so that you can be able to understand them from the word go. And the first word there is the income tax, just like our subtopic goes with. And the income tax, this is the tax that is levied directed on a personal income. And when it is monthly income tax, sometimes it's referred to as pay as you earn or just as payee. So that tax that is levied on personal income, that is the one that we know where we talk about the income tax. The next word that we need to look at is the gross income. And the gross income, this is the total income earned by an individual before the taxes and any other deductions. So whatever you get as income before the taxes is referred to as the gross income. And it is usually given by, the gross income is given by the basic salary plus any allowances that you may be having, you add it to the same to get the gross income. Then we have the taxable income. So the taxable income, this is the portion of the gross income that is subjected to the taxation. So the portion of the gross income that is actually subjected to taxation is the one that we talk about, the taxable income. And for us to get the taxable income, we have a formula here, is given by the gross income. Then you subtract the exemptions allowed from the income, that is the tax exemptions, if there are any. Not all the cases that are there, but if you have a case like that where we have the tax exemption, you subtract it for you to be able to get the taxable income. That is the amount of money that is going to be taxed. Then second last keyword there we need to understand is the deductions. And the deductions, these are expenses which include the tax and other deductions, of course, you will be having along the way. Lastly, the other keyword that we need to understand is the net income. Sometimes we talk about the net pay, and this one is given by the gross income. You subtract all the deductions, and the gross income, we had said previously, that is given by the basic salary plus allowances, that is the gross income. Then the deductions, it may include the income tax plus bills. You may be having maybe water bills, electricity bills, and so on. You may be having, a person may be having loan repayment. Then those are going to be deductions. A person may be having things like NHIF, among any other thing that is going to be deducted from the person's salary. That is what to talk about the deduction. So the net income will be given by the gross income minus deductions. So we are going to do various examples to be able to see the different way that you can be able to be tested on this part of the income tax. Okay, let's look at example 1 here, so that you can be able to see the process that one goes for you to be able to calculate the income tax, and maybe answering the questions on the area. And the questions reads that the income tax rates of a certain year were as shown in the table below. The table is there. The question is that in that year, Shaka's monthly earnings were as follows: so basic salary given there, house allowances given there, medical allowance, and the transport allowance. So Shaka was entitled to a monthly tax revenue of Kenya shillings 1,056 shillings. So you have to calculate the tax charged on Shaka's monthly earnings. And then number B, I told that apart from the income tax, the following deductions were made: a health insurance fund of Kenya shillings 500, education insurance Kenya shillings 1,200, and 2% of his basic salary for widow and children pension scheme. So you have to calculate the monthly net income for his employment. So this question was in KCSE year 2017, and we are going to see how are you going to be able to solve this. So we are going to start by answering the question number 1A, where you are supposed to get the tax charged on the Shaka's monthly earnings. And the first thing is to understand our table. We have the monthly taxable income. So this one is monthly, very key, because sometimes you find a table is in terms of per year, but this one is in terms of per month. And then it is in Kenya shillings, and then the rates are in percentage in each shillings. So it's good for you to first understand that. Then for us to start answering the question, number one, we need to first get the taxable income. So we need to get the taxable income. And our taxable income from our definition is said this is given by the basic salary plus any allowances that you will be having. And in our case, we have the basic salary as 28,600. We add the house allowance 15,000. We add medical allowance 3,200, and then we add transport allowance, which is 540. So the total, when you add these allowances and the salary, you get 47,340. So that is the taxable income. So that is the taxable income, the money that is going to be taxed. Then from there, for us to be able to tax this 47,740, we check on our table. How far are we going to go in our table? The first bracket we have from 0 to 9,680. Then we go up to 37,041. So when you look at our case here, it is 47,000, meaning that you're going to go to tax in all the brackets because our taxable income is beyond that 7,040. So we're going to make a table here, and on one side we have the taxable income, and then we have the tax on the other side. Our taxable income is 47,000, so we are going to tax all that money. And the first part, we are going to tax from 0 to 9,680. So you're going to be having 9,680 times the tax rate on that bracket is 10%. So times 10%. Then we go to the second bracket. How much do we tax from the second bracket? So this is how we go about it. We take this figure, 18,800. 18,800, we subtract this value that is up here, 9,680. That one we're going to be having as 9,120. When we subtract the 2, then we are going to multiply by 15%. Then in that bracket, we are going also to do the same. We get the 27,920. We subtract 18,800 to see what are you supposed to tax in that bracket. And when we get to that, we are going to find that we're going to be having the same figure, like the second bracket, 9,120 times 20%. Then you go to the fourth bracket. What are you going to tax in this bracket? So you're going to be having that 7,040. We subtract the 27,920, and we're going to get the same figure there, 9,120 times 25%. Lastly, what are you going to tax in the last bracket? We take our taxable income, which is 47,340. We subtract whatever you have already taxed, because when we add these figures here, they should give you up to that 740. That is what we have already taxed. Then to get to the remaining, it will be the taxable income for 7,340. We subtract that 7,040, and that one is going to give you 10,300. We multiply by 30%. That is the tax rate in that fourth black on the fifth bracket. Then we get that on the other side, we multiply. So 9,680 times 10%, using a calculator, is going to give you 968. Then 9,120 times 15%, that one is going to give you 1,368. Then we have 9,120 times 20%. We are going to get as 1,824. Then we have 9,120 times 25%. We're going to get as 2,280. And then lastly, we are going to have the 10,300 times 30%. This one we're going to get as 3,090. So this is now our tax. So we add these figures there, and when we add them, we get what we talk about, the payable tax, the amount of tax that you're supposed to pay without the relief. So this is the payable tax, what you're supposed to pay, and when you add this 968 plus 1,368 all the way to 2,090, you're going to get as 9,530. So that is the payable tax. This is the amount of tax that you are supposed to pay. But for our case here, we have the tax relief of 1,056. So from there, we less relief. If we have more relief, apart from the personal relief, we less those relief here, the 1,056. Then we get the now the income tax. So when you know that, we're going to get 8,474. So this is now tax chart on this tracker. Talk about the net tax. what you talk about the pay as you earn, because it is monthly. That is the amount of money that is going to be charged, that is the tax that this person there is going to be given. So that is how you'll be able to answer that kind of a question, how you get the tax, that's the process. And let's look at part B of the question, where we told that apart from the income tax, so this is the net tax or just the income tax. Apart from the income tax, we have other deductions that are made on this Chaka salary. We get the insurance fund, 500, education insurance, 1,200, 2% of the basic salary for widows and children pension schemes. So in this case, we need to be able to ask ourselves, how do we get to the net income? So we had the part B here. We said that the net income, we have a formula. It's given by the gross income minus deductions. Gross income minus deductions. And in our case, gross income, we say it is basic salary plus allowances, and basic salary, in this case, gross income is similar to the taxable income, but not all the cases. So the gross income will be basic salary plus allowances, which in our case here we have it there as 47,340 minus deductions. So deductions are going to include the tax. This value here is a deduction because it's going to be this is the amount of money that the government gets from your income. So deductions will be include the tax, that is 8,474. Then we add the other deductions. We had deductions like the first one is health insurance, is 500. We add the education insurance, which is 1,200, and then we add 2% of the basic salary, 2% to 100 times the basic salary. Basic salary was 28,600. 28,600. That is for the pension scheme. Then we subtract the total. So in this case, you have the gross income, the net income there. Net income as now the gross income, which is of course is 47,340 minus we add the total of this. So 2% of 28,600. That one is going to be 572. 572. So we add 8,474, 500, and 572, and the total is going to be 10,746. So those are the total deductions. That is the gross income. We subtract the two, and that we're going to get 36,594. So that is the net income shillings. That 6,594. That is the amount of money that Chaka is going to receive at the end of the month when all the deductions of the tax are removed. Let's look at example 2, and it's a question that was done on KCSE. year 2021. The question reads that the table below shows an income tax rate in a certain year, the monthly tax income in Kenya shillings, and then the tax rate as the table. Then the questions in that year, the monthly earning of Kanini were as follow: basic salary 64,500 shillings, and house allowance 12,000 shillings. Kanini contributed 7.5% of her basic salary to pension scheme. This contribution is exempted from taxation. She is entitled to a personal tax relief of Kenya shillings 1,408 per month. Calculate number A, Kanini monthly taxable income. Number B, the tax payable by Kanini that month, and Kanini net pay a month. So we start. The first thing is to understand the table. The table is per month, monthly taxable income, Kenya shillings. Then the rates are in percentage. So we start with number A. We are supposed to get the taxable income, and the taxable income is given by a formula: the basic salary plus allowances minus the exemptions. In our case, we have one, so we subtract that. So the basic salary here is 64,500 plus allowance. We have one, 12,000 minus exemption. I told that this 7,000, this 7.5% of our basic salary is exempted. So subtract 7.5% of the basic salary, 64,500, and this is going to give you 64,500 plus 12,000 minus 7.5% of 64,500 is 4,837.5. So when you add the two and subtract that, you're going to be having as 71, that is 1,662.5 as our taxable income. So when you have the taxable income, then we want now to answer question number B, that is getting the tax payable per month. So in this case, we are going to have a table. On one side, you have the taxable income, and then on the other side, you're going to be having the tax. So we look at our taxable income. We have 71,000, and when you look at our table here, we check how far are you going to tax this money. The first bracket is up to 12,000, then up to the over 47,000, and our money here, the taxable income is 71,000, meaning you're going to go through all the five brackets to be able to reach up to that point. So we are going to tax every bracket in this case. And we start with the first one is from 0 to 12,298. So if you take the last value there, 12,298 times 10%. Then the second bracket we are going to get as 23,885. We subtract this value that is on this end here, 12,298, and when you subtract the two, we are going to be having 11,587. This one we are going to multiply by 15%. Then the third bracket, you're going to be having 35,472. We subtract 23,885, and you're going to be having the same value as the second bracket, that is 11,587. This one is multiplied by 20%. Then whatever you're going to tax in the fourth bracket, going to be from 35,473 to 47,059. So that value, to get the value, you subtract these two, 47,059 minus 35,472, and you're going to get the same value here, 11,587 times 25%. Then to get what you're going to tax at the last bracket there, we are going to take our taxable income, which is 71,662.5. We subtract the 47,059, and when we subtract the two, we are going to be having 24,603. .5. This one is multiplied by 30%. So then you get those taxes. So 12,298 times 10%, you're going to be having as 1229.8. Then 587 times 15% is going to be 1738.05. Then 587 times 20%, you're going to be having 2717.5. Next, we're going to be having 587 times 25%. It's going to give you 2896.75. And lastly, we have 24,603.5 times that percent. It's going to give you 7381.05. So that is the tax. So we add those values for us to get the payable tax. This is tax that one is supposed to pay. We add these 5 values there using a calculator there. You're going to be having as 15,563.05. So then we this person, the Kanini, was having tax relief of 1,408. So now we less relief. This is why we less relief is 1,408.00 for us to be able to get the income tax. I want to talk about the payee, just the tax. So we less the 2, and then less the 2, we're going to be having as 14,155.05. So that is our tax. That is the income tax of Kanini. That's what she's going to pay. So the tax there should be 14,155.05. So let's look at the last part, that is part C, the net pay. Kanini net pay in that month. So part C, net pay, we say that net pay is given by the gross income minus the deductions. our gross income is given by basic salary plus allowances. So in this case, the gross income is not equal to the taxable income. So you have to be very careful on that. So the gross income is given by basic salary and allowances. So you get 64,500. We add 12,000. That is our gross income. Then we subtract deductions. Deductions, we have two of them. Number one, the tax, which is 14,155.05, and this 7.5% of the basic salary. The pension scheme that she was contributing, it is part of the deduction because it is going to be deducted from her salary. So the 7%, we had it here as 4,807.5. We also add that one to the deduction, 4,875.5. Then when we add the two, in this case the gross income, we are going to be having a 76,500. Then we add the deductions, 14,155 plus 4,875. We're going to get us 18,992.55. Then we subtract the two, we are going to get as 57,507.45. So that is the gross income. That is the net pay of the what reaches to Kanini's after